Hi everyone, welcome to our September VRT. The VRTs are virtual roundtables that we've created for our compliance community, and they are stated as the road to CrossTech world. We're going to celebrate our conference in November in Miami, and we expect to see everyone there. Building up the content and the knowledge in reference to this conference, we've created the virtual roundtables, and we welcome compliance experts as we discuss matters in the industry. This is the very first interview of a compliance officer expert. My name is Ana Karina Gonzalez, and I welcome everyone on behalf of the CrossTech team. Today, leading that conversation is our CEO. Let me introduce Priscilla de Oliveira Friedman, our COO at CrossTech. Priscilla has a background in operations management, strategy, process improvement, and consulting, as well as in training. Priscilla started her career in American Express and has led a variety of teams in the industry, such as call center, education, communication, customer service, dispute resolution network, as well as social media response team. I'm very excited and very happy to introduce Priscilla de Oliveira, our COO. She's going to lead the conversation, and we're going to have an interview with an expert, Jay Postma, President, MSB of Compliance, Inc. I'll let the floor to Priscilla, but before that, we want to thank Jay for accepting our invitation to join our VRT. We're not only honored, but we're also thrilled to listen to their conversation as they go back into the different topics that make reference to the compliance risk assessment, management of internal and external risk as contingency measures. On behalf of everyone, like I said before, welcome one more time to our September VRT. Priscilla de Oliveira Friedman, the floor is yours.
Thank you, Ana. What an honor and pleasure. And this is actually my first interview. And Jay, what a best person to be my first candidate to be part of this. Very honored to have you here as well. I copy Ana's words. And part of this initiative, Jay, I don't know if you know a little bit of the background, but I want to give you some context, is we wanted to make sure that our community for compliance felt part of CrossTech World, which is our flagship conference where we talk about business topics, digital strategy. But for us as a mission is, it's not only for you to have profitability and to reach different markets, it's how do you become compliant throughout the process. And so today, it is my honor to have you share a little bit of your expertise and your knowledge on risk assessment. We had the pleasure of working with a mutual client on our risk assessment project, as you remember. So I believe you are the perfect person to be part of this. So I will give you a little bit of time to give some welcome speeches before we start the interview.
Well, thank you so much. It's an honor to be selected to participate here. We're looking forward to the upcoming conference, and just how wonderful to see people in the flesh again, and to be able to participate as part of this great community of just wonderful people who make money flow in compliant ways that provide such wonderful service to people around the world, that make lives better and enrich and help families across the world. So excited to be here and be a part of this, and I'm excited for the upcoming conference. And it was wonderful seeing you at the Money Transmitter Regulatory Association. And that was just a taste. I think they had about 300 people, and I expect much more than that, hopefully, at the upcoming conference.
Yes, yes. And so let's get into business. So as you know, the topic today is risk assessment. So let's discuss, why is risk assessment important for MSBs? Why should they be thinking about that?
You know, it starts back after 9/11, and at the time, people thought, well, maybe we need to go to Congress and get it put into law to have a risk assessment. And then all of a sudden, people realized, no, we need to think about this different. We already have we already have legal coverage for this, because companies, in order to comply with the Bank Secrecy Act, they need to have a program that's reasonably designed. And in the absence of a risk assessment, unless for the very, very smallest and lowest risk types of MSBs, a check casher who only cashes pre-printed ADP payroll checks, maybe they don't need an assessment. That's not too complicated. But for everybody else, we need an assessment so that we can have compliance with that overarching goal of a tailored, well-designed, risk-based program that's reasonably designed. So that's where it started. And then with the AML Act of 2020, we'll be seeing some changes in regulation. They haven't percolated through the system yet. Congress makes law, and then FinCEN has to kind of write up proposed regulations, and then they have to go out for public comment, and then they finalize things. So things will be changing to where it's a hard written requirement, and that requirement will also be requiring companies to consider FinCEN's AML priorities, which they've already published. Things like human trafficking and sexual slavery and elder financial abuse and fraud are parts of the priorities that people now have will soon have a formal requirement, but we know it's coming. It was passed in law, but we'll have to include those things in our risk assessment. So for example, if you're a money transmitter that's involved in cryptocurrency, and you got a 90-year-old person who creates an account and on day one wants to transfer it to an external unhosted wallet, if you're thinking of your risk assessment and of those AML priorities, you might reasonably think that, gee, it's, to be 90 years old and spry enough to know about and invest in crypto is pretty cool, but maybe that's somebody who's being taken advantage of. So maybe we need to lock the wallet and prohibit the external transfer until we've called the person and verified that he or she's not being taken advantage of by some third party, that type of thing. So risk assessment can be very important to protecting you from financial losses, from compliance problems that could lead to regulatory fines, and it can be critical to protecting your customers and the communities you serve from being taken advantage of.
And when you talk about protecting your customer, one thing that comes into mind for me is, how do you protect data, right? A lot of the MSBs now are going through digitalization, are going through, implementation of different kinds of IT API products and solutions that require a lot of jiggling and maneuvering of sensitive information. So data protection is a topic that I know is a new trend for regulators, and it should be part of the risk assessment. What do you think about that? How do you define the protection of data within risk assessment?
Well, I think there's probably a second risk assessment, which is for data security. It's not necessarily going to be a part of your BSA AML OPAC risk assessment, but there are going to be some touch points between the two assessments. So for example, in a data security risk assessment, you may look at things about how often do we have people change passwords? What password typologies do we require? How often do we have people trained against to protect, from phishing or spear phishing?
Yeah.
Do we have social media policies which prevent us from putting information, the types of information that somebody might use to try to get through our defenses and confuse somebody? I had a client once who they had too much stuff on social media, and somebody called and, oh, I know your boss is here and this one's at this conference, and oh, and I know you're having problems at this branch with the software system and we're trying to help fix it, but I need you to do a transfer so we can test the system because it looks like it's affecting several branches. and there was so much information on social media that the person just forgot their training and thought, oh, sure, even though I don't have somebody here and I don't have money in hand and nobody's, they've told me nobody will ever ask for a transaction without money, don't ever do it.
Yeah,
they did it because the person knew so much information from social media posts that it seemed a reasonable thing to do until about 5 minutes after they hit send and the money was gone, and
wow.
somebody else was picking up the money, before they could stop the transaction. So I think those are types of things that need to be looked at. But then on the BSA, AML, and OFAC side of things, there's going to be some touch points too. One of them is what data are we collecting? If I'm the BSA officer and I'm not aware of what data we're collecting, I don't know everything that's available to me to use for risk mitigation.
Yeah.
Let's say we've moved to an online platform and we're getting more and more business through mobile phone. All of a sudden I find out, we're collecting a device ID, and with that we know the type of phone and the operating system, et cetera. And we've never used it in the past, but once I know that type of data is available, I could say, well, gee, if somebody goes from an iPhone to an Android or Android to iPhone, maybe that doesn't quite make sense. Maybe they changed the phone, or maybe somebody's gotten his, stolen his password and is trying to take over the account. So maybe we do a phone call, or we do a two-factor authentication or something. So there's data elements that
Okay.
the compliance officer needs to know are available in order to make sure that they construct controls appropriately to mitigate against risk. And then there's also sometimes data elements that people aren't aware of that could be used for transaction monitoring purposes. So you're going to look at those type of things. And then you also, from a BSA perspective, you need to know, because there's so much hacking going on and ransomware attempts and that type of thing. Do the IT people understand what type of activity is suspicious and needs to be reported, so that you can file a suspicious activity report because of that bad activity taking place.
I have a saying, Jay, in my personal life that I think it goes very well here. It's called prevention is protection. And I think all of the things that we're talking about here is how do we have, especially small and mid-sized companies, provide a risk assessment, not only internally, but to their teams that they're outsourcing, to make sure that they are covering all the bases. So let's talk about crypto.
Absolutely.
I know you mentioned
one quick second to pivot on yours a little bit is, when you're doing a risk assessment, it's so important because prevention is protection. And guess what? I don't know 100% of everything, and you don't, and neither does any other person in the company. So if it's just a small subset of the company, you may miss some risks. So it is just so important as part of that ongoing risk assessment process to be thoughtful of who do we include in the process, what other areas of the company should be contributing their thoughts and ideas so that we don't miss anything. Because absolutely what you said, prevention is in fact protection.
Yes. And sometimes a lot of these things are on the details, right? And the details that you miss, it could be where the big opportunity is. So
Absolutely.
That's why part of us in CrossTech, we like to focus on the business side and on opportunities and growth, but to mitigate that risk every time you make a decision on doing API integrations, digital projects, and involving everyone in the process. Right. So that's why I always tell my clients, prevention is protection. So now I wanted to dig into crypto. You gave an example of the 9-year-old client of yours that had that specific scenario. So how is the crypto community and compliance community looking at this? Is there specific guidelines for a risk assessment, traditional companies versus crypto?
I think some of the key differences are that the business models can be much more complex with crypto sometimes than a traditional money transmitter. So it's really important to understand the business model and to clearly lay out the business model in the assessment, and to and then to recognize over time when that model is changing. It's becoming more commonplace to include actual flow of funds charts and descriptions of the business model within risk assessments, particularly within crypto risk assessments. Because depending upon the business model, it may be complicated. Am I developing and maintaining a protocol? Am I creating and managing a stable coin? Am I, do I have a token that I've created? Am I permitting the trading of tokens? Am I facilitating that as an exchange where I'm a counterparty bringing two parties together for the buy and sell? Or am I the counterparty for each transaction? And knowing and understanding, where funds are flowing and how, and who's causing the action, who's responding to it is important. And then some of the other things with crypto that are so important is kind of thinking, what is there related to other types of money transmitters that make sense for us, or to banks that make sense for us that we can leverage? So, traditional money transmitters have foreign counterparties and correspondents, but a cryptocurrency company typically has liquidity providers or other exchanges that they're dealing with. And it's so important to have proper due diligence on those companies. But where would you look? Well, you might look back at what typical money transmitters have been using since, I forget, 2004-001 or 2005-001, when FinCEN came out with the guidance on foreign counterparties and correspondents. That's great to look at as a starting point. But then you should also look at the CDD and ultimate beneficial ownership rules that came out, and how does that affect things? And would you do some things different? The FinCEN guidance that was old, can it be read in a new light, and can you learn anything and do some things different? And frankly, both on the crypto side as well as traditional money orders. I know in our audits, we're doing much more looking at the ultimate beneficial ownership and any particular ties between related companies of our traditional money transmitters. And we're doing that also with the crypto companies. But in the past, regulators and independent reviewers have looked somewhat myopically just as the US operation. But if the US operation is part of a group of money transmitters that are controlled by the same persons, then there may be risks that are being missed and compliance issues that are being missed unless you broaden your scope and look at the group. So MSBs, money transmitters, need to do that too when they're looking at their foreign counterparties or their liquidity providers or other exchanges in the case of crypto companies.
Yeah, because I think there's a big perception, right? Oh, because I'm a crypto company, it's gonna be more scrutinized. Yes, it's gonna be more this, but I have some exceptions. I think the exceptions are very limited when you're talking about risk assessments, because you want to be as thorough and as detailed as possible, no matter which industry you are.
Yeah.
Even if it's crypto or non-crypto, some of the things are going to be very similar.
Yeah. Now with traditional money transmitters, at least in my experience, I've not seen anybody do a risk assessment on a particular fiat currency of a different country. I imagine there's people from an accounting standpoint in the cash management department that think through some of those things. And if there was a problem with a particular currency in the world, then they may say, hey, we need to stop, or change how we do business with this country. But one difference for crypto is that every time you want to start providing service in a particular crypto, you need to think about, is this crypto, is it a security? And I can't touch unless I have other licenses, or is it an asset and a utility token, in which case I can touch. And there's other risk factors at the token level. Is this particularly useful for money transmittal? Is it some type of privacy token? Are there reputational risks of dealing with that token? Am I going to lose my bank account because I'm using a token whose only use case seems to be supporting terrorism and criminality?
Yeah.
So there's other areas that need to be thought of. And then another aspect is with employee risks in crypto. With a regular transmitter, you might think about your Foreign Corrupt Practices Act and your UK Bribery Act and some other risks there. And you may say, okay, as part of my risk assessment, I recognize I need to train in these other areas, and we need to have a good sound ethics policy and maybe train on ethics also. But then you start dealing with these tokens, and because they're used for investment purposes in many cases, as the market is growing, and the utility of a particular token maybe is not quite there yet, because the service isn't built out, and it's really an investment in the belief that in the future this will be useful for a certain defined purpose. So we've seen the application of different investment laws, where you had insider trading. So it's also important to be thinking of, what do we do with our employees? How do we train them? Do we have a policy on this? And if we had an employee who appears to be conducting insider trading, how do we handle that? How do we terminate a person and take care of any legal issues, et cetera? And then we talked briefly about onboarding a new token, but what if something changes? You monitor, just like any risk assessment, you monitor and change over time. There may also come a time where it's appropriate to delist and stop serving a particular token or protocol. So when that happens, how would you deal with that? So when you get into crypto, there's so many interesting layers, peel back the onion and work on different areas. But the companies that are doing a really good job of that, are safer than those who are not doing a good job of it.
Of course, that makes sense. I wanted to touch base on the startups. As you know, in the industry, we have seen a lot of trends of smaller companies being discovered or mid-sized companies, being bought by big companies. How do what startup prepare themselves for a risk assessment? Because as you know, sometimes there's a lot of unknowns. There's a lot of things they're still trying to figure it out. What is the best way? What would be your advice to position them to success?
Well, I think risk assessment is an ongoing process, and you don't want to let the I'm going to get it messed up. Was it the perfect be the enemy of the good or something like that?
Yes, I know what you mean.
But it's important to get a risk assessment done, and some companies they build a program, or they cobble together a program based off what they used or knew somewhere else, and it's not based on a risk assessment, and that's problematic because it's you're supposed to have a risk-based program that's reasonably designed. So somebody may only have enough money and staff and timing, or ability to hire consultants to help them to get, whatever the base level.
Of course.
The base level Ford, and then they can come back
upgrade on the
later,
way,
and they can upgrade to a Buick, and then they can upgrade to a Cadillac and a Mercedes, and don't start off expecting perfection, but do the best you can. And there's no one format that's right. The real key is did you do a reasonable job of identifying risks and then making mitigation decisions based on your understanding of those risks. And if you do that and do the best you can, with the resources you have early, and then build over time, that'll serve you well.
So do it right the first time. So for all our startups listening, do it right the
Yes.
first time, put the right effort. And if you don't have the knowledge, look for consultants that can help you in the process. Because if you build the foundation wrong, it's going to be really hard in the end. So
Yeah.
that would be our advice, right, Jay?
That's right. You don't want to build on wet sand and have it sink.
Yeah. All right, now let's talk about outsourcing. Sometimes, especially smaller companies or company with smaller budgets, they believe outsourcing their compliance team is better. What is your recommendation? Should companies outsource or should they build a team in-house?
I don't think it's wise to outsource long term, because you can't outsource responsibility. You can get consultants to help for certain things, but they, if there's any meaningful business, they can't really serve the best interest of the company if they're not working full time as part of the company. It's one thing. I'm going to get licensing. I know I'm going to have to do licensing. I'm not doing any activity yet because I don't have licenses, or I'm doing, essentially beta activity in 1 or 2 state markets while we get other licenses. There's limited cases where having consultants serve in that capacity, I think work and are okay. But I don't think it's either good for the consultant, their company, or the MSB to do it much beyond that. Because if you're building the company and you're going to have volume, you need to have people who are attached to the company and invested and are part of things and access to full time. You can't do part-time compliance. It's a full-time job.
I love that. It's a full-time job. But one of the things I've seen, especially in CrossTech and our consulting division, is that we have a lot of companies that come to us to validate what they're doing, or at least to put the foundation of what they're doing. So I think it goes back to our last question. You can outsource your everyday, but you can double check what you're doing on the way. I really like that, because I think it gives you the validity from somebody outside that you may not have internally, and you need to have those checkpoints.
Yeah, and I think, and I'm not sure if this is what you're speaking to. I think it may be, but we do baseline reviews for people.
Yes. Yes.
prior to them starting licensed activity.
Yeah, that's what I mean.
It's an independent review, but there's no transactions to test yet.
Yeah.
It's, is your risk assessment reasonable? Is your program reasonable? Has your training been reasonable? Have you established reasonable transaction testing rules and procedures, and OFAC sanctions filtering rules and procedures? That's a wonderful thing. And some states are requiring that now before you activate their license and go live in their state. And it's something that I've been telling people for 16 years is that's what you should do.
Yeah.
If you start up your company and you don't have your first independent review until 12 to 18 months after starting, you're really doing yourself a major disservice. You will have had states in before that, of course, but you really want to have, no matter how good the people are that you've hired and do the program, you really want to have, I think, especially the board of directors of a company, and for the investors, you want to have an external group who validates that the risk assessment program are reasonable and does that baseline review. And then, frankly, after you've had the baseline view, depending upon the ramp up of transaction activity, you should probably have the first independent review along with transaction testing somewhere at about 6 to 9 months. It depends on how hard you push to start activity when you go live. If it's a very soft launch, then maybe 9 months. If it's a harder push for customers and revenues, then probably 6 months, because that way you've had the baseline review before anything. You've had the first review at about 6 months when you've had activity. And again, if there's any problems, they can usually be discovered and fixed before they become tragic.
Yeah.
And then after that review, then you can go on an annual schedule of reviews.
Sounds good. And I think, Jay, I have just one last question, and then before we can go to the Q&A and the conclusions. I think a lot of people that are listening to us, they want to know, is there a best practice, or what is the best practice for a well-done risk assessment? So if you could summarize on the main things that MSBs or crypto companies should be thinking about, what would that be?
Well, I'd start with looking at the MSBA's best practices document.
Yeah.
And I'd look at that and I'd go through that, not just with risk assessment, but with other areas as well. But just broadly off the top of my head, the key is that you're examining your product and service. I mean, we've audited people where there's products and services that are missing from the assessment, or somebody added what they thought was a different flavor, but it turns out to have totally different compliance requirements, because they modified something just a little bit. And now this activity, for example, that was payment processing and wasn't money transmittal is now money transmittal. So there's those type of things, but make sure that you're covering all of your products and services. Ideally, you would have flow of funds that you would show, and a process that would be clearly there, because when you have a process diagram, you're able to look at the different points of activity flow and funds flow and think about the risks that are there that you might miss otherwise without that. You look at your geographies, your customers, you look at your vendors, look at your employees, look at your third-party service providers, you look at your regulatory risk, your regulators, look at your banks and your banking risk. Training is a risk. Is it good training or bad training? Is it the right training or the wrong training? But then also look in your risk assessment at your culture of compliance. What type of culture do we have? What type are we working to establish the right culture where everybody can talk openly and not be afraid? Are there any risks in terms of how corporate lines of reporting are structured? That there may be people with conflicts of interest, and so things don't get done appropriately.
I remember
those are all kinds of things to work on.
Yeah, I remember on my time when I used to work at American Express, they had the ombudsperson. So you took all the AML, all the trainings, and then you had that phone line dedicated. If you had something you didn't want to share in front of others, you had that channel, so you feel comfortable sharing what you saw. So I always believe that that's a good practice for you to be able to have that pen, especially if you're a big company, that sometimes there is a lot of other things involved and you don't feel comfortable share something, or you're not sure if that's compliant or not. So always having those channels, I believe it could also be a good practice.
No, absolutely. A small company, maybe you don't have or can't afford
but somebody big
line or something. But a big company, and it can be scary when you think your boss is doing something unethical or illegal, or instructing you wrongly.
Yeah, exactly.
So to have a line that goes to where you can talk anonymously or talk in a protected manner to somebody, it can be very important.
Yeah, that is something I experienced in my own career, so I recommend it. Okay, I think we have one question, Jay, before we close. So one question, it says, thank you, Jay. Great information you're sharing. I want to know, in what stage of a startup should I be considering a risk assessment? Should it be right when I open? Should it be when I have my team formed? Should it be right before to my serious presentation to get investment? What is the best stage that a startup should be thinking about doing this?
Well, Okay, and I've been part of starting several companies. So if I was knowing what I know now, if I was going to do this, one of the first things I would do is to create those flow of funds diagrams. What is the service that I'm looking to provide, and how do I envision it working? And then once I have that down, I would have a verbal summary of what the service is and how it flows that matches off to that flow of funds. And then I would want a compliance opinion. And if I'm, I might do that myself as a startup, at least now with my background, I certainly would, but, but I would at least make a stab at it. This is what I'm trying to do. This is what it looks like as a picture. This is what it looks like in words. And then based on a review of the regulations, look at the Bank Secrecy Act and under the definitions. Am I looking at something that's money transmittal, or is it subject to any of the exemptions, and it might be a payment processor, or is it is there an aspect of prepaid access, or what's there? Because it could be prepaid access as a type of MSB, money transmittal type of MSB. It might be one of the other flavors, but that's not typically where the entrepreneurialism is these days. It's usually in regard to money transmittal. But I would look at that, or is it software as a service, or combination of some of these things, and make sure that I know what the regulatory framework is that I've got to be founded on. And then once I've got that, if I'm comfortable enough with it, and I may not have enough money to go get a compliance review or a legal review of it at that point, so I may come back to it later. But at that point, I can at least make sure that my pitch deck that I'm using to raise capital with early friends and family, and others is sufficiently accurate, and I've got something to back it up.
Yeah.
And then I would make that first risk assessment, do the best I can on my own, because I'm going to need something. And then as you do that, you may learn something else. And then as you start bringing your team members on, you can work on improving and updating the assessment over time, and then do your initial program. But you're going to want to have, before you go off to apply for state money transmitter licenses, you're going to want, that the facts, make sure the facts and circumstances as designed on your flow chart and narrative are still accurate, and that you haven't pivoted or changed something. And then have a compliance or legal review to make sure that's right. And then update your risk assessment further and your compliance program, because you're going to need those updated to facilitate your licensing applications. And your business plan, your business model and business plan document will also reflect some of that material that you've already developed. So that's what I would do.
And I think, Jay, that goes for everything, like not only for your licensing, but what I've seen in my world is when we do consulting for opening bank accounts or doing an API integration, any vendor or any particular integration you're going to do with anyone, these are the typical things they ask. They ask me, have you seen their flow of funds? Have you seen their business planning? Do you understand their business model? So I think this applies to everything in the business. We have another question also, and it's about compliance officers. Jay, is there a problem if a compliance officer in a company is made to report to the head of commercial officer instead of the CEO or board of directors? If it's a yes, what is your best advice to address such conflict?
Yeah, I think in that situation, you've got the compliance officer. It sounds like from the title, it sounds like the compliance officer is reporting to someone whose priority is sales and income growth,
instead of CEO,
instead of staying legal compliant and protecting the company. I think that is a disservice to the board of directors, disservice to the entire company and the market it serves. And that's one of the things that FinCEN specifically identified as a problem back, gosh, I think it's been 6 or 8 years now, right? With FinCEN gave a missive on culture of compliance. And one of the issues that they saw that frequently led to problems and significant fines and regulatory actions was precisely that situation. So I would get a copy of that FinCEN guidance, and then I would have a talk with my boss, and say, this is not personal, but I respect you. I think you've got integrity and ethics. It's not about that, but this is not set up in a way that is appropriate. It creates conflicts of interest where I may not get the staffing and support and attention that I need to have, and I need to report differently. No matter what, you should, as compliance officer, you should have a dotted line directly to the board of directors. And to prove that, it means that you need to have actually met the board of directors and to participate as a presenter at their meetings, at least one of the meetings a year, and be available at the other meetings, even if you're not presenting. Maybe there's a chief risk officer or something, because there's other non-BSA risks that is reporting. But when I was a BSA officer, even if I wasn't reporting, I was on duty, on call, out in the hallway, so that if any board member had any question whatsoever about materials that we'd provided, that I was present and available. So I would have that conversation and share that FinCEN guidance.
And I would also add, Jay, on this, and this is my personal perspective, is don't be scared of challenging the status quo, right? I think as a compliance officer, you are signing for things, you're putting your name behind the procedures and operations. So be okay to challenge if something is going outside of what you're signing, because at the end of the day, as a compliance officer, you are responsible for it. So I think that's also always something that I advocate. And I know a lot of compliance officers sometimes are women, and sometimes we are in a very male community as well. So sometimes it's hard to position yourself. So I advocate for all the compliance officers that have these issues to be able to really challenge the status quo. And if it's something you're uncomfortable, then say don't sign it, right? Because as a compliance officer, you have to sign and you're responsible for what you're signing. So I think that's something very important to say.
It's also important to remember, and you might advise the board that, in addition to their fiduciary liability to the company and its shareholders, they also have a personal liability under the Bank Secrecy Act. And every employee of the company has a personal liability under the Bank Secrecy Act. But when you put it in terms of, look, there's a potential conflict of interest here, no matter how wonderful you are, but you can't be in this situation. We have personal and professional liability, and hey, board, this may not be covered under E&O and D&O insurance, depending upon the situation. So we need to have a different reporting structure. That's important. And when I was at the Federal Reserve Bank, I worked at for 10 years, and for about 6 of those years, I managed a vault with $1 billion in currency in it. And one of the things that we always talked about was, other than your life, your most valuable asset is your integrity. And so you never want to put yourself in a position where your integrity can be questioned if you can help it. So this person who's the operations officer responsible for sales and revenue production, frankly, if he understands he has personal liability, and that FinCEN has said that this is a problem, he or she really shouldn't want to be in that position, because they don't, if they know what's good for them, they don't want to be in a position where their integrity could be unnecessarily challenged. Sometimes that people don't do anything wrong, but the situation just looks bad. So go ahead and address that by fixing the reporting structure.
Thank you, Jay. Everybody's job is a compliance job in the company, not only the compliance officer. I love that you said
Absolutely.
that. Yeah, so thank you so much. I'm very happy that you're able to participate in this interview. Everyone, this is Jay Postma, President of MSB Compliance. I just want to do a little bit of closing statements to talk about what's coming next. And then, Jay, I'll open the floor for you to give you the last advice for all our attendees in the call today. We have upcoming the next 2 months, CrossTech World. We will be in Miami, November 15 to November 17 at the Guitar Hotel, Seminole Hard Rock. We're very excited to see not only the business community, but also the compliance community. We created on day one a lot of compliance courses where you're able to get non-CAMS credits, and then you're able to get the certification. We also have some panels for compliance officers. Hopefully you can come along with your CEO and we can address some of these discussions while we are in the conference. We are a very niche conference. We are that to network, to meet people. A lot of our customers, they know each other for a long time. Like Jay, he has been in the conference. So if you're new to the space, this is a great place to be. And if you're not new, I think it's a wonderful place to reconnect with your colleagues, and we will be discussing topics just like this, and you're also able to meet the best in the industry. And that's why we have Jay, also our compliance counsel will be there, and we'll be able to really introduce who are the people that you should be partnering and working with to guide you in the right direction. Again, I'm Priscilla D'Oliveira, COO of CrossTech, and I'm very happy to be here. Now, Jay, I'll pass the final words to you.
Well, thank you. Jay Postma, the MSB Compliance, and have just loved working with Hugo and Priscilla and IMTC, now CrossTech, and looking so forward to the upcoming conference and to seeing hopefully many of you there. Just a final note is don't underestimate the value and importance of your risk assessment. And it's not something that you can set it and forget it. It's something that you need to give some serious thought and discussion, and remember to include people from different areas of the organization so that you don't miss anything. So thank you.
Thank you everyone for joining, and we hope you to see you on our next VRT in October. Stay tuned in our social media, Facebook and YouTube. See you soon.